Welcome back to another video. This is going to be a video for the Forex exchanges, currencies, and what I'm looking for the next 3 to 4 weeks. All right, so starting off from the charts, we have the Euro, Dollar, and British Pound. On a yearly time frame, this is a yearly chart. Okay, you can see that this low right here, Euro wasn't able to close below in 2024. Therefore, it is possible that this is a stop hunt. Okay, for British Pound as well, it did not close below this low right here. However, for dollar, it closed above this high. Okay, so right now we have a cracking correlation. On the other hand, this low right here was taken out by British Pound, but not for Euro. This low as well is taken out by British Pound, but not for Euro for now. We have a yearly fair value gap down here for the dollar. And in the beginning of the year, we took out previous year's high. So same thing, we took out previous year's low for Euro, and we took out previous year's low for British Pound. If you compare between the year 2003 and 2024, 2023 and 2024, we can see that there is SMT on the highs and on the lows for all three assets, all three currencies. Okay, with the latest one being the SMT on the low. Right, as you can see right here for 2023, Euro made a lower low, British Pound made a higher low. The dollar made a higher high. So right here we have a cracking correlation, which is the most recent cracking correlation. And then right now price is moving with the cracking correlation towards the upside because we have SMT on the lows. So over here we can clearly see that the most bullish asset in terms of between Euro and British Pound is Euro because it's respecting the lows on the higher time frames, and we are sort of sideways, but initially it was an uptrend. But for British Pound, we have been in a downtrend, and right now we are sideways. Dropping down into the lower time frames, we are going to be focusing on Euro because Euro is the more bullish asset. And anyways, it's the asset that I prefer to trade as compared to British Pound. So I'll be zooming in on Euro on the lower time frames. This is Q1's candle. We took out the previous year's low, and right now in Q2 we open up right up here, and then we are trading way beyond this bearish order block. So if I am bearish, I would be looking for price to respect this down close candle because right here we did in fact have a change in the state of delivery, and we even have the SMT on the highs. However, right now that is not the case, and we are trading way too deep into this bearish order block, in my opinion, for us to be bearish, for us to continue to go lower. Therefore, I think we have changed in the state of delivery, and we will be looking for these two highs up here. All right. So what is above these two highs? I have no idea. Like maybe we have this inefficiency here that it wants to reach for, but right now the near-term objective is these two equal highs up here. On the monthly time frame, we are sort of forming a monthly fair value gap, which would be confirmed at the end of this month. So we would have it in May. And then on a weekly time frame, we have this swing low, which is a monthly fair value gap as well. So it is a potential turtle soup setup. And then on the daily, I would have to open up all the drawings that I have. So right here we have the low of 2024, the high of 2024, and the high of 2023. right now we're gravitating towards, obviously, the high of 2024. Overall, we have been in a consolidation since Q1, Q2, and then we have the manipulation below the Q1's low in Q2. Q3, we took out Q2's low, and then we have the low between British pound and euro in terms of Q2's making lower lows. And then for the British pound, it did not take out Q1's low. And then right now we are having this market structure shift towards the upside, which we have equal highs. This is a true open of the year that I've marked April 2025. And this shaded area right here, it was a fair value gap that formed the low of 2023, which led to this high right up here, the high of 2024, before this major run lower to take out 2023's low. Therefore, this fair value gap is very significant. As you can see right here, we utilize it before to send price higher to make the high of 2024. When we traded lower below this fair value gap, we took it as resistance to make a new low in the year 2025. So this is your true support resistance within the range. Okay, and then right now we are trading up above it. Over here you can see that for this particular day, once we closed above it, the next day we dropped into the support and then we just blast through the highs. So right now what I'm looking for is I will be waiting for price to trade back down into discount from this low to the current high. Why am I using this low? First of all, it's a stop hunt before this expansion higher, and this is a really large expansion. Therefore, it is reasonable for me to say if we were to take out this low coming back down into 2025's opening price, then we would be looking for the lows down here, which means all bullish narratives would be removed, discarded. So over here we have the 50% right down here below this swing low, which is going to form a monthly fair value gap, which is also a weekly swing low. So right here. And then we have 62% and the 705% just right in the middle of the inversion fair value gap. Therefore, it is very easy for me to put in a swing position once we take out this low as a total soup. So I'll be looking to buy euro in the next few months to attack 2024's high and 2023's high. Very, very simple here. And with that, that's it for this analysis. I am bullish for euro in the next few months. Thanks for watching. Have a nice day and good luck trading.